What up traders, what up investors, Ken here from Dyslexic Investor. I wanted to make a very quick video this morning to kind of underline on what we could be seeing here in the market. Again, the market's going to open up in about 45 minutes and we're looking at the S&P 500 or the SPY. So to kind of give you a quick recap what happened yesterday, we had a huge gap down, dropping over 4, depending on what you look at, 4 or 5% in the overall market. From the swing high, we can kind of do a quick analysis from the previous day to there. We're looking about a 7.2% drop. That's quite significant. Is it overdone? That we'll find out. As of currently looking again at 8:50 this morning, it's S&P is trading around 307. So it's kind of more of a bounce here that we're looking for moving forward. That being said, this could be a dead cat bounce. So what a dead cat bounce means, it's a potential, makes it look like it could be potentially going higher, and then everything's fully recovered, but just be mindful of that. So everything is somewhat nominal until we get to a certain price target. So let me break this down to like an hourly chart so I can kind of give a better perspective here, and then we're going to actually turn on extended hour trading to see what's going on here. Let's do this, swing high to swing low. So this is what a Fibonacci tracing looks like from the swing high to swing low. We have seen a lot of volatility in the last 2 days, especially yesterday, with a very enormous sell-off. That being said, we could be potentially seeing some higher prices today and seeing a potential bounce. What a bounce means, since the 5 and 8 are starting to cross through the 21, again this is an hourly chart here, the 5 and 8 are crossing through the 21, we could potentially see a first level of resistance at around 311. These are just calculations. This is an art form. This is not a science. This is not, I don't have a crystal ball over here in my desk, I'm rubbing it and it's telling me what to do. Potentially could see that. Again, that is somewhat aligned too with the 200 exponential moving average here, again on the hourly chart. For potential upside, that'd be like level 1. This 308 is potential level as well, but you kind of see here the 5 and 8 are crossing through the 21. That's a pretty strong strength. The TTM squeeze is looking very juicy, as we say. The volume oscillator is kind of blah, because after hours traded there's not much volume, but this thing will start kicking up, potentially going through the yellow line and turning positive once the market opens up and that volume comes in again, because you can see in after hours trading or extended hours trading there isn't much volume. It's all the volume is between 9:30 and 10:30 Eastern Standard Time AM, and then like 3 to 4. You can especially see a lot of volume coming in the last hour of trading yesterday, really bringing down the averages to a low. That being said, what are we looking for downside potential? That is basically the first level of support is going to be around the initial low at 300. So we're going to just call that here, break that up. And then the other thing I wanted to kind of show you, the other Fibonacci retracements that we have been looking at is from the previous, so this is called a retracement extension. So it's a previous high to low to the current high, and that gives me these numbers here. And if I can zoom out, there we go. The potential downside support, which we talked about in the previous live stream of yesterday, for support around 295. So that kind of comes up numerous amount of times within the charting of this option, or of this trade. So if we kick this back to a daily chart, it kind of gives you a better perspective. Again, that 295 literally lines up with the 200 exponential moving average. You have that top band resistance lining up with multiple intraday short-term trading ideas for a potential swing higher. I know this looks kind of like confusing, but that being said, just being very precise. If you're looking for a potential bounce that could be short-lived, and be mindful again with intraday trading and day trading, it's very risky due to very fast moves, and again with these flushes down in the market has been very drastic, and even though the gap ups the last 2 or 3 weeks have been phenomenal for the bulls. I think a lot of those weak hands are being flushed out, and they're not being able to hold on their positions. I think there might be potential bounce higher, and then a potential other flush lower to the 300 or potential to the 295. Again, I do not have a crystal ball. I just wanted to emphasize this for a lot of new traders, especially with a lot of folks getting into the market and trying to make sound investments and try to look at what potentially could be coming forth. It's very rough time, honestly, to getting into investing due to the fact of these huge swings in the market, and there's just so much capital being thrown at stuff that shouldn't be thrown at. I'm currently working on a video again about Hertz. So Hertz is trying to file like $1 billion worth of new stock options for whatever reason to potentially save the company. I don't know, but I think they found all those Wall Street bets and novice Robinhood or what are Webull investors to potentially buy their stock from them, so potentially get them out of bankruptcy. I don't know. That being said, guys, I just wanted to make this quick video for you guys this morning. Thank you for watching. Don't forget to like and subscribe. Join the Discord if you got any questions or so forth. Again, we'll have another live stream potentially today or most likely on Sunday or Saturday, and be tuned for that. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.